Hello, it's George from Triangulated back again with another episode of Listen to the Markets. Sorry I missed last week, was traveling a little bit, so couldn't get to it, but what's going on this week pretty much encompasses both weeks. So I don't have use of my camera today either, so we're just going to do a little audio visual where you're looking at my screen and listening to me talk. So this is a collection of major macro markets that I call them macro markets, but that I track. And if you look at the 5-day change, what you really see here is the big move up is in oil, small move in the dollar, a little bit in bonds, but generally everything is down. And really the moves, when you look at the charts, there's a big move down in silver, but it's in the context of the recent volatility, it's not that big a deal. The real thing that stands out to me is oil, which just continues to scream higher because of the war in Iran. So that is really what's driving things at the moment. And then if we go look at some ETF sectors for the week, we see a very similar phenomenon where we've got oil and gas explorers are up, XLE, which is the energy sector ETF, oil and gas equipment services, utilities. So basically, the only strength that we're really seeing in stock sectors is in the energy sector, and everything else is down to varying degrees. When I add all of this up, what I see is that there aren't that many the havens for people to hide in with the war in Iran. And I think that the markets are basically telling us that the war in Iran is going to drive things, and that ultimately, the outcome of that will probably dictate what happens to prices, at least in the short term. Now, I, for one, have absolutely no idea what's going to happen. I know that any sort of post from Donald Trump could lead to a lot of volatility. So I personally, as a discretionary trader, when wearing my discretionary trader hat, don't want to do anything right now because it just seems like it's a very very dangerous time. There's too much potential for just headlines that could cause prices to move a lot one way or another. So that said, the other thing that I do notice is, and I've been talking about this for the past several, I guess, weeks or months, but the stock market's been essentially in a range, or it was in a range, as you can see on the chart here, from more or less, let's call it, I guess, depending on how you want to measure it, but from November until about mid-March, and it's really starting to break down a little bit. And this applies to all of the major indices. The Dow broke most of its trend lines, at least the ones I'm looking at here. I look at a lot of different trend lines, so I wouldn't emphasize these as particularly important. But as you can see, just looking at the chart from across the room, if you were to put it on a wall, it's starting to break down. The NASDAQ is similarly, I guess it's hanging in a little bit better, but it underperformed a bit earlier than the others. But when I look at the S&P, what I see here is just it took out the channel for the past few months to the downside. It hasn't broken meaningfully, and that's not to say that the trend upward couldn't resume. And if you zoom out, it still is definitely an uptrend, but more vulnerability than we've seen in the recent past. And you couple that with everything going on and what some of my tactical models that I use in money management are doing. And I look at this and I just think it doesn't look great. It could look better. That's not to say that bad things are coming, but it is to say that not ideal in terms of if you're a bullish stock market guy, which I tend to be. So all that said, I think just all eyes are on the war, and we'll see what happens. And my personal take is don't do too much. Don't get too far out over your skis until things calm down or we get a little bit more resolution. That's it for this week. I'll be back next week. Thanks for watching.